Should we deal with the company?
Let's do it.
All right, let's talk about Cisco. Now, I kind of messed up that lead in there because I want to talk about November 14th. What happened on November 14th? Well, November 14th was a very special day. What was that day? Well, that was the day that after 25 years, Cisco, after the internet boom, hit an all-time, or actually matched their all-time high back from 25 years ago. So we thought, hey, let's take a look at the fundamentals of this to see, is it going to do the same thing as a PTOT or not? The company we're talking about is Cisco. Used to be, it is still Cisco Systems, symbol is CSCO in the communications equipment industry, only 1.2% short on the float side, 81% institutional owned. We do see a PE ratio, not bad, 29.4 versus 36. It was, I think, around 130 back 25 years ago. So they've better there at 29.4. But price to sales not looking good, 5.3 versus 2.8. Price to book value, 6.4 versus 4.2. Price to cash flow, 22.1 versus 19.9. And the PEG ratio does look good, though, 2.4 versus 6.8. Shows you're paying lower for the growth of the earnings. Now, they have grown their earnings over the last year by 11.2%. That's above the industry at 9.7%. Sales are up 8.9%, slightly ahead of the industry at 8.5%. And the 5-year earnings per share growth estimate from the analyst is 7.6% versus 6% for the industry. They do pay a 2.2% dividend, use 63% of their earnings to pay that out. Let's take a peek at the balance sheet. Current ratio 0.9 versus 1.5. And I'm kind of surprised. I thought that would be better, but it's not bad. It's just not as good as I thought it was going to be. Debt to equity 0.6 versus 1.1. I do see here something I don't usually talk about. The intangible assets are 56% versus 40% for the industry. So a lot of intangible assets that could be, I say could be written off, which could hurt the stock somewhat. They do have a nice profit margin of net profit margin of 17.9 versus 8.3. Return on equity 22 versus 20.9 for the industry. Return on invested capital 15.8%. Free cash flow very good, 12.7 billion. That's double the industry at about 6.5 billion. Chase, what do you got?
Yeah, those intangibles, a large part of them potentially could come from, they did an acquisition back in 2024 of a company called Splunk for about $28 billion, I guess. So it was a big acquisition.
Was it an AI company? Do you know what it was?
I don't know exactly what Splunk did. I had a friend of a friend that worked there, and obviously they were all into it and said, oh, it was a great company, but I don't know what they did.
Yeah. If you're going to invest in this company, you want to know what that is, because if that's AI chips or whatever, that could be written down because they paid a lot for that company.
Yeah, $28 billion is a hefty investment, especially considering the market cap's about $300 billion. I mean,
yeah,
it's about 10% of your market cap. That's substantial.
A few $1 billion write-off.
Yeah. But looking at the current price here for Cisco, again, their ticker symbol is CSCO, $76.10, 52-week range. The low here, $52.11, and the high, $80.06. Year-to-date, stock's done well, up about 28.6%. Going forward for Cisco, though, is a little bit disappointing. Not as bad of a valuation that we had during the tech boom, but we go out to July 2027, estimated earnings per share of $4.47, gives us a target sell of just $74.20. That means it trades around 17 times those future earnings. So not a value any longer. And this was one of the last, I'm going to say, big tech companies that seem to have fair valuations and now, well, I should say, had undervalue potential. Now it has what I'm going to call a fair valuation.
Well, you said 78. That's about where the price is. You said target sell price was 70.
Target sell price is 74.
74. Okay, so
it's right about in line with historic multiples.
And you've done very well with the stock over the last few years. They've done some great things. They said the magic words AI, and their stock goes up. And I mean, the numbers do look pretty good. The analysts, 24 of them, low 432, high 464. But I just would not see any reason to continue to hold the stock. And back in the tech boom, when it was at 78, I said, yeah, you should be selling this. People say, oh, you don't get it. You don't get it. Well, I'm sorry. The fundamentals, again, say time to sell again.
Well, again, we wrote a post on Cisco and going to give a little bit away here, but Barron's actually came out with an article that year talking about how it was trading at 130 times estimated earnings and how it's like, gosh, this doesn't make sense. And people thought they were crazy. Well, by October 2002, the stock traded under 10.
Yeah.
So again, that is where valuation, I'm going to say it doesn't necessarily mean anything in the short term, but long term can have a huge impact. And that's why we don't like to overpay for anything.
Yeah.